Creating a profitable trading strategy is crucial to any Forex trader's success. It's the ultimate decider if you're actually going to be profitable on the markets or not, as your trading strategy should be the only way that you trade on the market. This video is going to go through exactly how you are going to create the perfect trading strategy for yourself, and could potentially be the most important video you watch as a trader. Now, it's a simple process, but it's going to require your full attention, so please shut out any background noise, turn your phone off, as you are going to want to seriously commit to this video. Okay, now, first things first, why is a trading strategy so important, and why should you even listen to me as a trader in the first place? If you've never watched any of my videos before, my name is Rob. I'm a 7-figure funded trader. I've been full-time for over 2 years, hit multiple leaderboards, multiple payouts with different firms, and also mentor over 200 traders. And my trading strategy, or the trading strategies that I teach, haven't just affected my results, they've affected everyone at WokeFX. Check out some of these results from some of our students. So the first thing I want to go through in this video is basically understanding the type of trader or person that you are in the first place. Now, the reason why this is so important is because understanding the type of trader that you are will massively impact the type of strategy you will need to create for yourself. So for example, some of the questions I've got here is, are you a swing, scalper, or intraday trader? Are you typically a mechanical trader or a discretionary trader? Do you typically overtrade, undertrade? What time are you available in the day? What are you like as a person, especially when trading? Do you prefer high volatility pairs? What current confluences are you most comfortable with? Now, the reason why I ask all of those questions is because as a trader, you need to know yourself as much as possible. So when you're creating a strategy, you're making a strategy to your strengths or what will improve you as a trader, rather than what's going to make you maybe overtrade, maybe over risk, or take positions when you don't want to, or actually build on your weaknesses rather than your strengths. So I'm going to go through an example of someone creating a strategy using these questions. Let's say you are an intraday trader. So typically you're taking positions from an hour anywhere to 3-4 hours within one day. You typically don't hold positions overnight, and you typically don't like being in positions for a really short amount of time, like 15, 20, 30 minutes. So straight off the bat, you'd look to trade a session ideally. If you're a new trader, I would definitely suggest trading almost completely mechanically. The more discretion you add into a strategy, the more inconsistent your results can be. I do use some discretion in my own strategies in terms of making a very slight decision. So for example, if I'm trading New York, I've got to decide if I'm going to trade a continuation of London low or London high, or whether we're going to use it as a reversal point in terms of sweeping this liquidity instead. And that's a discretionary decision that I have to make based off the data that I've already got from that day and where we are on higher time frame. Bit of a tangent there. That's more to do with my trading when I'm trading New York. But let's say you are trading mechanically. So you're an intraday trader and you're trading mechanically. I'm going to say again, generally, majority of people do overtrade rather than undertrade. So if you're overtrading, then you want to have a pretty precise system that stops you from taking too many positions. So rather than keeping the strategy a bit more broader, maybe for people who undertrade, let's make it a bit more specific so there's less positions you're actually able to take, and there's more clarity that you're going to need on your positions so that you don't overtrade. Hope that makes sense. Time you're available each day. Let's not use New York because I've already used that as an example. Let's say you are more available in the morning. So from kind of 8 a.m. And again, what you are like as a person, if you are, let's say, a morning person, you're better in the mornings and you're more in the zone, you like sticking to a routine, which is very good for a trader. Would recommend reading Atomic Habits if you haven't already. You should be able to wake up, get into a routine, get into a trading routine that might specifically suit your plan, your criteria, your strategy, and your trading rules, and therefore make sure that you perform better. What we've got from that is that, like I said, you're a intraday, you are trading mechanically, you typically overtrade. I've made a mess of this. London session timing. Awesome. So we've identified the type of trader that you are, what you've picked up already from your own trading. What you would get from this is that you need, like I said, a relatively specific system. Let's say you added some more questions in it. This is very broad just to show you how I would do it personally. Realistically, you want to ask like every single question you can think of just to make your trading criteria as refined as possible towards you. So like I said, if you've got a favorite pair, let's try and find that. What do you typically like to trade? Do you like higher volume pairs? If you're going to be trading London session, you're going to want to be trading a pair that moves more in London session, ideally. I mean, I would do something similar to the way that we trade in Woke in terms of trading London session. I would look at trading from kind of 8 a.m., having a specific kill zone. I would try and make a specific strategy based off quite a few confluences as it's mechanical. Due to over trading, you would probably have a set risk to reward, so that within your trading criteria, within your trading rules, you trade that set risk to reward without changing it to therefore stop you getting greedy or stop you taking another position. And that way, every single day, if you're taking a trade, I don't know, 3 out of 5 days or every day, depending on, again, the criteria of the trade, then you know that you're either going to end up with a 1% loss or a 3% gain or a 2% gain or a 4%, depending on what you're trading with, the amount of risk you're trading. So now that we've got that data, let's go onto the charts. Let's go on EU, for example. And now I can start to mark out exactly what we can do. So, like I said, you ideally want to find some concepts that you already know. I'm not going to spend the entire time basically teaching you exactly every concept, but let's say you want to keep it relatively mechanical. You want to trade specifically at one time. You want to make it relatively simple. If you're a new trader, you're intraday and you're free from, let's say, early morning 7. So typically, straight away, you're going to base your strategy around London session. I would wake up around 6:30, just so you're ready for any pre-London movements in Frankfurt, and I'd hold that till 9. So being on the charts for 7 to 9, that's when you're going to get a lot of volatility for London session. You're probably most likely going to get that sweep of Asian session liquidity or mitigation of a key POI, whatever you're looking for. Again, let's try and keep it as mechanical as possible. So let's say you're trading London session, you're wanting to trade, let's say I'm hoping that you guys would know what liquidity is. So what these yellow boxes here are Asian session liquidity. So one criteria is that maybe, again, if you're trying to make it extremely rules-based and extremely more specific, so you're not taking lower positions, obviously what you would do with these strategies is build up data on them, refine them and continuously improve them to find what works best for you. And then once you've got that win rate risk reward that you're happy with, that's when you move forward and trade it. But let's say you're doing it, you understand Asian session liquidity. The thing you're looking for is a sweep. And if you want to make that further, what you can do is create confluences or criteria that you need to make within the criteria. You might be making it a little bit advanced now. That's why I said you guys need to focus. So let's say you need a lower volume Asian session with built up lows and highs to create, let's say, accumulation. So now you're specifically on the charts for 7 to 9. You only trade the Euro USD. You only trade a lower volume Asian session. So let's say anything under 30 pips with built up highs and lows for accumulation. And then we'll do entry model. Lower time frame. Let's keep the risk rewards super simple. Risk to reward 2R. So 2R, all you're needing in terms of win rate would be 25%. Entry model being a lower time frame change of character. So when I say lower time frame, let's say 5 minute. Let's just pick a time frame. 5 minute, maybe I trade 1 minute because I'm a little bit naughty. And let's say because we're trading with a set risk to reward, normally I would trade adapting to market structure, but like I said, that's a lot of discretion, or not a lot, but that's more discretion in terms of your take profits. So let's make it less discretionary. Like I said, fixed 2R every single time. You enter on the candle closure that's created the change of character. So for example here, not the best example of world, because it is a low volume. It's way less than 30 pips. Got built up liquidity here. No change of character when it's coming down. Staying on the 5 minute, you're waiting for a change of character is basically when price changes from a bullish or bearish market to the opposing direction. So in this example, price is bearish on the 5 minute coming in here. And when you're reading price action, you always need to be looking at what's caused the last high / low. So let's say from this is creating a highs here. Cool. So got movements coming down here, lower low, lower high, lower low. Then from here, it's very tight. Technically get a change of character here. After that sweep of Asian session liquidity, built up structural liquidity as well. I'm not going to add loads of criteria in here, like looking for specific POIs to trade out of. Just giving you a very brief one, more of a mechanical one to follow. That's less decision making to a degree. So let's say you trade it on the candle that causes that. So here, where the change of character is, by the way, would be here. Candle closure above it as well. Trade with your stop loss at the low, and you're trading a 2R. So that is oh God, that's a fly on my face. That is an example of that. Obviously, in this case, it would have gone to a bit bigger win. Here, no valid trade because you don't get a change of character in your time zone. So like I said, you're looking from 7 a.m. all the way to 9 a.m. is when I would typically look for a kill zone within London. So here to here. I mean, you can use the 9 a.m. candle if you want, but even then, you don't get an entry. Gives you a bit more space to find a position, but nothing there for you. Here we go again. We've got some built up structural liquidity and obviously your session liquidity. Price sweeps that session liquidity. So all on the 5 minute, price moving lower to new lows. Quite hard price action to read, but then you get the low, the sweep, then from the sweep, change of character. Awkward one to read. If you read body closures, it's there. If you read wicks, it's here. So anywhere on those candles is fine. And again, not targeting any session highs, not targeting anything crazy. Well, you would be going past session high here, but just mechanically, like I said, if you're trading A2R, it's a win. And again, that's within that time zone of 7 a.m. and so forth. 7 a.m. to 10. Okay, so just from what, 3 days, you're already up 4R or 4% potentially. And if you were able to refine that strategy a bit more and trade a bit more aggressively and maybe understand, take profits more, you shouldn't do that as a new trader. You shouldn't even do that as an advanced trader. Sometimes it just depends on the style and the more that you know yourself. Like I said, in this case, no, you've made 2R on both occasions, so you should be happy with that. Let's have a look again. This one's a tricky one. I personally wouldn't be as keen to enter here at all. This is today, isn't it? So today there was CPI, I believe, for the pound, and there was CPI for euro as well. So that's probably why that happened. Now, again, you need to make a decision. Are you trading on news? You probably, again, shouldn't. If you're a new trader, I wouldn't typically trade when there's big fundamental news in that London session. Not very likely. Most of the time, it's normally at 1:30 in New York. But today is a good example of when there was one. Even if you are trading the strategy, we still had that sweep of London low and that change of character. This one, don't like it as much at all. Body closures, again, technically trade it there with a 2R. Okay, so now you're up 3% from the exact same criteria happening multiple times in a week. So this is a very good example of this week. But can you see the same thing? Asian session liquidity swept, 30 pips or below, lower volume Asian session, built up highs and lows, entry from 7 to 9 every single time. This one might be a bit late. It's not. Meant to put 33% win rate. Confused myself, quite a heavy amount there. So if you take 3 trades, you win 1 and lose 2, then the third one will bring you back up to break even. If you took 4, lost 3 and won 1, you'd be 1% down. Right, glad we cleared that up because that was wrong. So you need 33% win rate for break even, and anything above that, then you're profiting. It always kind of depends on the market, the structure of the market in terms of where price is likely to be heading, higher time frame wise, etc. So for me personally, I've been heavy on shorts in terms of I believe price is going to go short. I think the dollar is going to strengthen. So I have that in my strategy. So I haven't traded that much this week. Or the last couple of weeks, mainly because I'm looking for price to start turning bearish and short the market. However, we've only really got buying opportunities from this exact strategy. Let's go for a few more examples. Basically, what you would do now is you would go through and collect data on this. This is one strategy that we've just gone through. It's very loose, not that loose, but it's very mechanical, but not like extremely advanced at all. To be honest with you, if you have been trading and you don't understand this position, you've been trading for a long time, this strategy, then I'd be quite concerned. You should understand pretty much everything that I'm talking about here, but it's just showing you in front of you that how like often this can work. But yeah, I mean, this is something that we give to a lot of WokeFX traders that are trading more mechanically. Not specifically this one. It's similar. We give obviously New York session strategies, London session strategies. We properly explain the strategy in a lot more depth and go through back testing results, etc. But obviously, if you guys know how to do this yourself and back test, then this is what I would do. I'd back test a strategy like this or whatever you're comfortable with, whatever time frame suits you. So again, if you're trading New York session, trading something similar, you might do it based off London session liquidity. You might do it off London supply and demand. You might do it off higher time frame stuff. You might be a swing trader, so you might trade higher time frames and only trade certain order blocks or inverse fair value gaps or breaker blocks. You can trade all sorts. You just need to have that criteria there, because otherwise you're not going to see consistency. Some traders I know actually change their strategy, or have multiple strategies that they trade depending on the cycle of the market. So you'll hear a lot of traders talk about quarterly theory and the different stages within the market throughout the year. That's completely normal. But obviously you don't actually need to make it that advanced. A lot of the time these strategies will provide good results for a long period of time throughout the market. And if you're back testing and you've got a big enough sample size and forward testing, you'll see that yourself without me having to show you that, or without me having to kind of talk you through it. In terms of obviously what will get the quickest results is realistically having someone do that, go through it one-to-one with you. That's what we do at Woke. That's our main thing, is understanding you as an individual, talking you through what strategy would make most sense for you, the timings that you'd look to trade, your style as a trader, because everyone sees the chart slightly differently. This is one strategy that I've gone through and just made up there and then. In terms of how you would actually approach the markets, could be very different, could be very similar, could be very similar to me, could be using different concepts. but it's about having that criteria locked down with trading rules, with a clear plan. And then from that, you can get results like these. I mean, I've taught them the exact kind of criteria that I would look for. And that's the same with the majority of people in Woke. However, saying that, there's a lot of people within Woke seeing really good results with a completely different strategy to a degree to what I trade. And that's because we've made it either more mechanical, or we've taken out certain concepts, or we've adapted it to a new pair, or we've gone through a new refinement with them and found a way that they prefer to trade. And what we've done with them is, rather than just saying like, oh, that's the way that you trade, I don't know that. That's not the process of being a trader. The process of being a trader is being able to stick to a strategy, manage risk accordingly, scale with funding, get consistent payouts, not lose your head or psychology at any point, and see results like that. And that's kind of what we built, and that's what we do at Woke. So if that does sound like something that you'd be more interested in, I'm happy to do this in way more detail, obviously one-to-one with you guys, or in our group mentoring calls in the Discord as well. To be honest, it's a pretty good process, even just booking the call with us, because most of the time you'll be on a call directly with me. And not to toot my own horn, but to have a 7-figure funded trader literally talk you through exactly what they've done and what you can do to get those results 10 times quicker than I did, is going to be massively beneficial. So if this video has helped at all, feel free to book a call below. Should be in the bio. Like I said, it's likely to be with me. If not, it'll be with a 6-figure funded trader from Woke Effects. And in that call, we'll give you a free Discord, our free newsletter, a light course as well. And we'll go through that individual plan with you on how you're going to get the quickest results, whether it's with our process or not. So yeah, hopefully see you guys on some calls. And if not, make sure to stay up to, and if not, make sure to subscribe to this YouTube channel to get more information, and follow my socials on Instagram, Dons.effects, Woke Limited, Rob Dono, and anything else like TikTok and stuff like that. I hope this was helpful. If you enjoyed this kind of more insighty, educational style video, please do comment below.